Hello everyone. In our previous class, we have discussed the value added method. Today, we will discuss the income method. Income method is also known as factor payment method. Okay. In value added method, we check only the value added, right? But in income method, we check the income paid by the producer to the factors of production, or we call it factor payment. Or we check the income received by the factors of production from the production unit, or we call it factor income. So in income method, we take the sum of factor payments or the sum of factor incomes. Now what is this factor payments and factor income? We know that there are four factors of production, right? Land, labor, capital, and entrepreneur. We get rent for using land, wages for using labor, interest for using capital, and profit for using entrepreneurship, right? So what is this factor income and factor payment? When we talk about factor payment, it is from the viewpoint of producer. Okay, when production unit pay to the factor of production for using the factor services, we call it factor payment, and which is regarded as factor income by the household sector. Okay, so uh, f- factor income is from the viewpoint of household sector, and factor payment is from the viewpoint of producer, okay, or production unit. So if we add these factor payments or factor incomes, we get net domestic product at factor cost, NDP at FC, or domestic income. So NDP-FC is a sum total of factor payments or factor income that are generated in domestic territory in an accounting year. Also remember, NDP-FC is a sum of factor income acquiring to private sector and factor income acquiring to government sector. Okay. Now let's talk about component of factor income. Number one, we have compensation of employee. What is this? COE is a reward. Okay, it is a reward for rendering productive services by the employers or by the workers. Okay, so it is a benefit or reward given by the employers to the employees for rendering productive services. It includes all kind of benefit, whether in the form of cash and kind, okay, paid to the employees by employers. And it includes wages and salary in cash, wages and salary in kind like free accommodation, free education to children, free medical facilities. Also include employers' contribution to social security scheme like provident fund, retirement pension, NPS scheme, or any other scheme for the benefit of employees. Okay, all these three make COE. Now, for examination purposes, if you find the value of COE, let's say 30, and also the value of wages and wage, or say employer contribution to social security scheme, if you find in the item all these three items, okay, what we are going to do, we are going to take only the value of COE. If the value of COE is given, we know that wages and employer contribution to social security scheme are a part of COE, right? So if the value of COE is given, then we will take the value of COE, because wages, the value of wages, the value of employer contribution to social security scheme are already included in the value of COE. So we will neglect the value of wage and employer contribution to social security scheme if the value of COE is given. If the value of COE is not given in the item, what we will do, we will add wages and employer's contribution to social security scheme to get COE. Okay. Next, we have operating surplus. Operating surplus is an income from property and income from entrepreneurship. Okay. Income from property includes rent, royalty, interest. Rent is a factor income generated from ownership of land and building. Royalty refers to income generated from granting leasing right, copyright, right? And interest is a factor income generated from ownership of capital. So these are rent, royalty, interest are your income from property. And income from entrepreneurship or say profit includes dividend. Dividend is a profit distributed among shareholder. We have corporate tax. It's a tax on profit. And corporate saving. These are undistributed profit which are retained as reserve to expand business or to meet any unexpected expenses. Okay, so dividend, corporate tax, and corporate saving are your profit. Okay, so OS comprises of income from property and profit. Income from property comprises of rent, royalty, interest, and profit comprises of dividend, corporate tax, and corporate saving. If we add up all this, we get OS. Now, for examination purposes, let's say that the value of OS is, the value of profit is given. Let's say 30. And also the value of corporate tax, corporate saving are also given. In such cases, what will happen? We know that profit comprises of dividend, corporate tax, and corporate saving, right? So if the value of profit is given, we are not going to check the value of corporate tax and corporate saving. We are going to neglect this value because the value of corporate tax and corporate saving are already included in the value of profit. So we will take only the value of profit, okay? And we will ignore the value of corporate tax and corporate saving. If the value of if the value of profit is not given, then you add up corporate tax and corporate saving to get profit. Okay. And now we have mixed income of self-employed. What is this? It's an income of self-employed people. Income of self-employed people. Suppose I have a small coffee shop and in my own house. Okay. I have used my own resources like labor, or say I work there. I have used my own money, and also I'm the owner. Okay, I have used my own house. I work there. I use my own money, or I invested my own money, and also I'm the owner. So I'm doing everything, right? So the amount or the return I receive from such services is called mixed income of self-employed. Okay. So these are the three components of factor income. If we add these three components, COE plus OS plus MI, we get NDP at FC, net domestic product at factor cost. And if we add NFIA to our NDP at FC, we get national income or NNP at FC. Okay, if we add NDBFC, if we add NFIA to our NDBFC, we get NNP at FC or national income. Now let's look at the step for estimating national income. Number one, we have to identify or classify the producing unit. Okay. Number two, we have to classify factor payments. We have to classify COE, OS, and mixed income. Third, you add COE, OS, and MI to get domestic income. It should be domestic income. Okay, domestic income, and then you add NFIA to your domestic income to get national income or NNP at the FC. If we know that this is domestic, right, and this is national, so To turn domestic to national, we add NFIA, right? Okay. Now there are certain precautions that should be taken care before estimating national income. Number one, transfer income. Okay, the transfer income will not be included in the estimation of national income. Why? Because transfer income is the income received without any goods and services provided in return. Let's say without any correspond to flow of goods and services. For example, like unemployment allowance, charity, old age pension, scholarship. These are not included in the national income because such receipts do not correspond to flow of goods and services. Number two, we have windfall gain. Windfall gain like lotteries, like we like winning lotteries, winning horse race. Okay, they are not included in the estimation of national income as there is no corresponding flow of goods and services. Third, interest paid by producing unit on capital borrowed is included. Now, interest paid by producing unit on capital borrowed. Now, producing unit borrowed some money and it is for investment. In such cases, interest paid for such borrowed capital will be included in the estimation of national income. But interest paid by consumer on capital borrowed is not included in national income as capital is used for consumption purpose. If a consumer, for example, like house loan, housing loan, car loan, right? Now, for such cases, amount borrowed is not used for investment. The amount borrowed is used for purchasing how a car, right? Or for building your houses. So it is for consumption purpose and not for investment purpose. So the interest paid on such loan are not included in the estimation of national income. But interest paid by producing unit on capital borrowed is included because capital borrowed is for investment. Okay. All right. So these are the precaution that should be taken care. Now let us solve some question. Number one, we have to find national income, that is our NNP at FC, right? So in income method, first thing we have to find the value of NDPFC. At any cost, you have to find the value of NDP at FC. And the value of NDP at FC is COE plus OS plus MI, right? Okay, now let's solve it. NDPFC equal to COE plus OS plus MI. Value of COE is given here, 2000. OS, now let's find the item in the OS. Okay, let's find the OS in the item. We have rent, interest. Rent and interest is these are your income from property and it's a OS, right? And we have profit, dividend. So profit, the value of profit is given and also the value of dividend. We know that profit comprises of dividend, corporate tax and corporate saving, right? And we have already discussed that if the value of profit is given, we are going to ignore the value of corporate tax, saving or dividend, right? So here the value of profit is given, so we are going to ignore the value of dividend. Okay, we are going to ignore this value. So rent plus profit plus interest, and we have MI equal MI 10,800. So domestic income. Now let's find our national income. This is domestic, right? Domestic. We know that NNP at FC, NDP at FC, NDP. This is your domestic and this is your national. So to convert from domestic to national, what we are going to add NFIA, right? So if we add NFIA to your NDPFC, we get NNP at FC or national income. Now in the item number 7, factory income to abroad is given and the value of factory income from abroad is not given, right? And we know that NFIE equal to factor income from abroad minus factor income to abroad. The value of factor income from abroad is not given, so it's 0, and minus factor income to abroad is 50. Okay, and here we go. 10,750 crores is your answer. Let us solve this question too. We have to find GNP at market price. So like I said, first we have to find NDP at FC, okay? And we know that the formula is COE plus OS plus MI. Now look at the item. Let's find the COE. Number 4, wages and salary is your COE. Number 8, employer's contribution to a social security scheme is your COE, right? So these are your COE. And after that, let's find the value of OS. We have rent, royalty, interest. These are your income from property and its OS. And we have profit. So rent, royalty, interest, and profit are your OS. And we have mixed income here. Okay, rent, royalty, profit, interest plus MI. Then we get 5,600 crore. Now we have to find GNP at MP, right? How we are going to do? We have to find GNP at MP. Now how we are going to do? We are going to use this NDP, okay? NDP at FC. Now let's start a conversion. Gross to net. That is plus depreciation, right? Domestic to national plus NFIA, right? FC to MP plus NIT, right? Okay, plus depreciation plus NFIA plus NIT, and here we go, 5,600 plus 70 plus 40, and we know that value of NIT is indirect tax minus subsidies, right? Value of indirect tax is not given here, whereas subsidies is given, so indirect tax minus subsidies, right? This is your NIT, so 0 minus 20, okay? And here is your answer, 5,690 crores.